bought silver at $25. You sold it at $100. You feel like a genius. You made a 300% return. But then April 15th comes around, and you get a bill from the IRS, not for 15%, the rate you pay on stocks, not for 20%, but for 28%. You stare at the paper. How is this possible? I held it for more than a year. Welcome to the collectibles tax. The U.S. government does not view gold and silver as money. They view it as a collectible, the same as a vintage rug or a baseball card. And because of that classification, they punish you for owning it. If you don't understand the tax code before you sell, you are going to donate a third of your wealth transfer back to the state. Let's learn how to stop that from happening. Here's the forensic breakdown of the tax code. Most assets, like Apple stock or real estate, are capital assets. If you hold them for over a year, you pay the long-term capital gains rate. For most people, that is 15%. But precious metals fall under Section 408M of the tax code. They are collectibles. This means the maximum tax rate is capped at 28%. If you are in a high tax bracket, you pay 28%. If you sell in under a year, short term, it's even worse. You pay your ordinary income rate, which can be 37%. Compare this. Profit on 100 KAL of stocks equals 15 KER tax. Profit on 100 KAL of silver equals 28 tax. The system is rigged to discourage you from holding sound money. It incentivizes you to hold paper assets, stocks, over real assets, metal. Does the government know you sold? That depends on what you sold and how much. Dealers are required by law to file Form 1099-B for specific transactions. This is the SPY form. It tells the IRS exactly who you are and how much you got paid. Here are the triggers. Silver bars, sales of 1,000 ounces or more in one transaction. Gold bars, sales of 1 kilo, 32.15 ounces or more. Gold coins, sales of 25 ounces or more of gold maples, Krugerrands, or Philharmonics. But here is the loophole: American Eagles. The IRS classifies American gold and silver eagles as legal tender. Therefore, dealers are not required to file a 1099-B when you sell them, regardless of the quantity. You could sell $1 million worth of silver eagles, and the dealer does not have to automatically report it. Note, you are still legally required to self-report the income, but the automatic surveillance trail is not there. This is why smart money pays the premium for eagles. They are buying privacy. It isn't just the feds, it's the state. 42 states have removed sales tax on buying bullion, but some still charge it. If you live in a state like New Jersey or Maine, you might pay 7 to 10% sales tax just to buy the metal. You are down 10% the second you walk out the door. The smart money avoids this by buying online from dealers in tax-free states or using vault storage in places like Delaware or Texas. But the bigger hit is when you sell. Capital gains are usually treated as income by the state. If you live in California, you pay the 28% Fed tax plus the 13% state tax. That's 41% of your profit gone. This is why wealthy stackers often move to zero-income tax states, Florida, Texas, Nevada, before they liquidate a massive position. Geography is a tax strategy. Is there a way to pay zero tax? Legally? Yes. The self-directed Roth IRA. A Roth IRA is a retirement account where you pay tax on the money before you put it in, but all the growth is tax-free. You can open a precious metals IRA. You transfer cash into the IRA. The IRA buys physical silver. The silver is stored in a secure vault, like Brinks, in your name. If silver goes from $30 to $300, your account grows by 10x. When you retire and take the money out, you pay $0 in taxes. The 28% collectibles tax? Gone. The state tax? Gone. This is the holy grail for a silver squeeze. If you believe silver is going to moon, holding it in a Roth IRA is the most efficient way to capture that wealth. The catch: you can't hold the metal in your home safe. It must be in the vault. You trade possession for tax efficiency. What if you don't want to use an IRA? What if you want to keep the metal? The billionaire strategy is buy, borrow, die. They never sell their assets. They borrow against them. If you sell your silver, you trigger a taxable event. If you use your silver as collateral for a loan, you get cash, liquidity, but you don't sell. Loans are not taxable income. Companies like interacting with crypto-backed loans, DeFi, or specialized bullion lenders allow you to deposit metal and take out cash. You spend the cash, you pay interest, which is often tax deductible, and you keep the upside of the metal. If silver doubles, your collateral doubles. This allows you to live off your wealth without feeding the IRS. It is risky. If price crashes, you get margin called, but it is tax efficient. Finally, there is the apocalypse scenario. If the dollar collapses and we move to a barter economy, episode 18, taxes become irrelevant. In a hyperinflationary collapse, you don't sell silver for dollars. You trade silver for land, food, or labor. These are private, peer-to-peer transactions. Junk silver, pre-1964 dimes quarters, is the currency of this world. It has no paper trail. It has no reporting requirement. While we don't advocate tax evasion, the reality is that in a currency reset, the black market becomes the real market. Physical metal is the currency of the free market. It is the only asset that exists completely outside the digital panopticon. Episode 009. Let's summarize the investigation. You worked hard to buy your silver. Don't let a lack of planning lose it. The Smart Money Playbook. 1. Know the rules. Understand the difference between short-term and long-term gains. Hold for a year if you can. 2. Buy privacy. Prioritize sovereign coins, Eagles Maples over generic bars to avoid automatic 1099-B reporting. 3. Use the Roth. If you are buying for the long haul, put some of your stack in a self-directed Roth IRA to zero out the taxes. 4. Borrow, don't sell. If you need cash, explore lending against your stack instead of selling it. The government wants a cut of your foresight. Your job is to legally minimize that cut. This is the Smart Money Wisdoms. The future belongs to the owners. Thanks for watching. Like and subscribe. See you next time.